You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it. You got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Boot Camp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, your Options Boot Camp drill instructors, Mark Longo and Dan Passarelli, will break it all down for you. Old trading walks into a bar. New trading raises it. Unlike some guys, tastytrade puts traders first. Maybe you're the type to hunker down on your desktop for hours. Maybe you breeze by on your browser. Or maybe you just need that top-rated app right by your side. However you do it, tastytrade's got the most advanced tools you need to tackle stocks, options, futures, and more, all in one place. Chart your heart out with over 300 indicators. See opportunity differently with interactive curve analysis. Use backtesting to learn from the past and plan for the future. The platform is only the beginning of better trading. You'll also find low pricing, lots of education, and backup from a support team that really gets how traders trade. It's no wonder Investopedia named tastytrade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/ride with us and see for yourself. tastytrade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. Fall in boot. It's time to get into peak options trading shape. It's time for Options Boot Camp.
All right, everybody. That music means we are back once again. Time for Education Wednesday. Yes, it is time for what the cool kids call a little bit of the old OBC. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which so many of you folks are binging. Remember, if you want to go deep into the pro Q&As, the oddities, you want to get your name in the hat for the giveaways, join us to heckle Dan in the live stream. Only one place to go. theoptionsinsider.com/pro is the place to go to learn more as we learn who's joining us on the old OBC today. Yes, I am pleased to say the streak is alive. We are joined once again by our old pal, the black-hatted one himself, Mr. Dan Passarelli from Market Taker Mentoring, what the cool kids call Mr. P. It's a bit of a whiteout here in downtown Chi-Town. You can't even see across the river here in the studio from downtown. How are things in the options mecca known as Frankfurt? Is it a whiteout down there too, sir?
Oh, man, it sure is. Jeez Louise. I mean, it is snowing diagonal over here, and it's just like, oh, man, I went out to the post office, and it's cold out there. This freaking sucks. Why do we live in Chicago again?
These are the few weeks a year where we get the cliche Chicago winter that everyone thinks we get, even though we don't really get a lot of snow usually. I mean, I came from, New England. I have a lot of relatives still back there. They get crushed in snow. We don't get anything like that here. But this is one of those days, if you look out the window of the studio, listeners, the snow is coming down so hard, you can't even see across the river here in downtown Chicago. And the snow is blowing up. It's coming down from the skyscrapers, and the wind's hitting it, blowing it right back up. So we got a swirling maelstrom of snow, which is always fun. That means the schools are closed. It's a snow day, Dan. And you know what happens on a snow day? It's time to grab a cozy cup of cocoa, or perhaps Dan's favorite, a little Bailey's without the coffee. And we roll on into a little bit of the old mailbag.
Mail call. Time to look at questions submitted by our listeners.
All right, everybody. I hope it's nice weather where you are. And of course, if you're listening to this like many of you are, months and indeed years down the road, I hope it's fantastic weather for you as well. But for us right now, we are in the midst of a snow day. So let's pull up by a warm fire, shall we? Put on maybe some nice flannel PJs, grab a cup of your hot beverage of choice, and we'll roll on into a little bit of the old mail call. Nothing warms the old cockles like answering your folks' cues with some A's out there. Let's start, Dan, getting a pulse of the old folks. You know, it was the Super Bowl this weekend, Dan. So we put out a fun little poll for our audience, as we are wont to do time and again. And we asked them over the weekend, you know, it's time for the $1 million question. Who do you want to win the big game? Not who do you think is going to win, but who do you want? We gave them 4 choices. The Chiefs /ref /Taylor Swift. Get a little snarky there, just for fun. Or Fly Eagles Fly, or anyone but the Chiefs, or you're just there for the wings and the beer and the ads. And anyone but the Chiefs took it, Dan. 37%, 31% just wanted some beer and some ads and maybe some wings. 20% were Eagles fans, and only 12% going for the Chiefs, which I guess that's good, because that means 88% of our audience had a good time over the weekend, Dan, because Chiefs fans, that 12%, they got a bit of a whooping, Mr. Dan. What was your Super Bowl partay? What was the Frankfurt soiree like, sir? Some nice soft cheeses, a little bit of charcuterie. What'd you have?
We went over to our friend's house, and we, had some cocktails, had some Super Bowl type food. Cowboy casserole was on the menu, and that was good. I did watch the game. I don't know. I've been a little out of the football loop the last few years, but did watch the game and enjoyed it. There's only one Taylor Swift sighting that I saw. Maybe there was more on other, I don't know.
Yeah, it was kind of muted on that front, which was, I think, for a lot of people, a pleasant surprise. Maybe for others, an unpleasant one. Speaking of pleasant surprises, we came across this one during our Option Block show yesterday, listeners. We did a fun flash poll. We put it out to you folks at the end of the day because you folks are the ultimate arbiters. It looks like this stock is off to the races again already. We were talking yesterday, listeners, about Big Bear AI Holdings, BBAI. And at the time, the stock was around $8. And we said the Jan 26, 10 calls. So Jan expiring in 2026, obviously. 10 calls. So they were about $2 out of the money. Might have even been higher out of the money. Let me go see exactly where we put this where the stock was on the Monday show. Yeah, it was about $8. And we said, the 10 calls are trading 35,000 times that morning for nearly $4, $3.90. So you were talking pretty much 50% of the value of the stock. This is a stock that not that long ago, listeners, in November was trading about $1 and change. Could have easily bought all the forever call you wanted for about $1.50, $1.75. Stock has obviously rallied, and now someone's coming in 35,000 of the 10 calls. They were obviously 2 handles out of the money at the time for nearly $4, 50% of the value of the stock, and about double what the stock was trading for just a few months ago. I said, that price, is that too rich? Do you like it? Or would you prefer to buy the stock? The stock had actually ticked up. It was closer to $9 by the time he posted the poll. So we said, would you rather buy the calls for $3.90? Would you rather sell the calls? Which, again, not a bad buy right. You're getting, nearly $4 on top of the 10 handle, obviously. Or would you just prefer, at that point, just to buy the stock for $9? Which, again, if you buy the stock on margin, you buy the stock for about $4.50 versus the $4 for the calls. That can go away tomorrow. At least with the stock, you have something. Now, obviously, you're getting leverage. You're getting more deltas with that. So that's a selling point for somebody. Mr. Dan, obviously the stock's looking good today. It's up another $1.40 today after selling off a little bit since we talked about it. It sold off down to about 770 actually yesterday. So it was taking a drubbing. So these calls were not looking good. Now they're looking good again. The stock at 938 today. Dan, what are your thoughts on that? It's an AI stock. You're getting some duration. You're going out about a year, but you're paying nearly $4 for the privilege, which is about half the price of the stock, which is about what it costs to buy the stock on margin, sir. What are your thoughts?
Yeah, this is one that was lighting up our options radar short squeeze scanner. And I was just looking at our chat room at a guy who got into there on Monday, and that worked out pretty darn swimmingly. 22% short interest of the float. And man, these are fun ones, man. When it goes from like $2 a month ago to $9, those are pretty fun.
So you'd be down for buying the calls for nearly $4, sir, with about a year to go?
Well, I don't know about that. The short squeezers, to me, the best way to play those is well, I mean, the way we have our scanner set up is the ones that have high short interest. As soon as when the stock is up a little bit, when you start seeing massive call buying, then you get in and they don't all pop, but the ones that do, you ride it out like this, and you get out just because you never know what's going to happen.
Well, about half, actually exactly half of our audience, 50%, so they prefer to buy the stock for $9, in which case you're doing all right there either. You're still up after you were sweating yesterday. 33% said they'd rather buy the calls. 17% would rather do the buy right, probably sell the call. I'm assuming you're not selling the call naked, in which case you haven't been listening to the show at all over the past decade plus. But interesting stuff out here. Dan, our other question of the week, the actual question of the week right now, a little bit more contentious out there. We're getting into another hot name that is hot for some, certainly hot from a price perspective. Also, I think contentious for a lot of people. This is Palantir. We were joking about it a week and change ago on the Option Block show that it had around a 450 PE. We said that was kind of ludicrous at the time. Well, forget about that. After the earnings, the stock has popped. The PE is now north of 600 listeners. So at that level, you don't have to be a hardcore market fundamentalist to start scratching your chin and saying, well, I don't know. That seems a little high. So we thought we'd ask you folks, listeners, this is our question of the week right now. Do those magical letters known as AI, and of course Palantir very heavy in the AI game, do they trump the other two letters known as PE that people used to cling to for a long time as a true measure of valuation? Gave you four choices. AI trumps PE, PE trumps AI, or who cares if the stock goes up at the end of the day? Or is it time to buy some Palantir puts? Dan, what are your thoughts on this north of 600 PE, or are such measures meaningless in the AI boom? And then where do you think our audience is going?
Well, I think PE is always meaningful, particularly the forward PE. So, yeah, I don't know, man. This is one that I read about a long time ago and have owned some shares. I definitely rode it out through some painful times, before this big pop started. But I don't know. I mean, for me, I'm staying in the shares, even though from a PE standpoint, it's just massively, massively high. But I don't know. Yeah, I mean, the getting's good. The whole thing about PE ratio is if the E gets bigger, the PE normalizes over time. So, I'm staying status quo. As far as the audience, I don't know. I see people talking about this sort of both ways. Everybody's always finding some, something to hate about anything. I'm going to say the audience leans more bullish on this.
Let's see. Our audience is actually exactly a tie right now, Dan. 32.3% each for AI trumps PE, which you see numbers like this, it's kind of hard to argue. And also 32.3%, Dan, say it's time to buy some puts in Palantir. So we got exactly a tie for number one. Number two, the fundamentalists, 25.8% say PE is always going to trump AI. I mean, I guess Exhibit A against that would be Palantir, of course. And then 9.7% are kind of in your camp, Dan. Who cares if it goes up? And, I have history of this name, too. I remember getting famously run over selling puts. It might have been the 10 strike, maybe the 8 handle even. I remember I got run over that's how low it was. And I was like, man, what's up with this stock? I'm getting run over on these puts I sold. Now here we are 100 plus. What is it, 116 today or something like that. Just completely astronomical levels. Get over there, listeners, at Options and make your voice heard if you haven't done so already. And if you're listening to this way down the road, then by all means, just head on over to Options anyway, because we always have a question of the week waiting there for you. And you know what's always waiting for you as well, listeners? This is a little bit of the market taker question of the week.
And now, it's the moment you've been waiting for. It's time for the Market Taker Question of the Week.
All right, Senior AP, the folks have been waiting. They haven't gotten an MTM Question of the Week in a while. What you got for them, sir?
All right. How often do you roll covered calls? So this one, my covered call trading is one that I look at every day. And, in a perfect world, you don't roll them at all. They just go right up just below your short strike, and the calls expire, and, you buy them back at a nickel and roll up to a higher strike, and you keep making money on the stock and the calls. But that is unrealistic. So here's my big secret trick. If the stock, if I want to skate and don't just want to sell it at the strike and be done with it, if the stock goes up through the strike, I roll it usually up and out. Depends how much time is left until expiration. Depends on a few factors. So I don't know. Maybe that is 40% of the time you end up rolling it or something like that. In which case, sometimes you make on the call, sometimes you lose on the call, but you take in that additional premium, and in the long run, it just works. It doesn't work as well as when you say, oh, well, the annualized return would be this. Well, yeah, big deal. It's never going to get annualized to work out perfect every time, but it still works out. So yeah, stock goes through the short strike, I roll. That's all I do.
Pretty straightforward at the end of the day, Mr. Dan. Hit your strike, you're out. Or you're rolling, right. You're living to fight another day, up and out. Or maybe you just have another sip of that Bailey's without the coffee, sir. Get close to that fire. It's kind of chilly out there, Mr. Dan.
Sounds like a stomach ache.
that could be. I've never been a Bailey's guy, but Dan, I don't judge. You like yourself a little bit of Bailey's. Who am I to rip it from your cold, dead hands? All right, let's keep rolling out to the listeners. This might get my vote for handle of the week, even though we got a few good handles, Dan, but this one is a good one. Crazy hummus.
Crazy hummus.
I like that. I don't know what crazy hummus would be. Is it super spicy? Is that what makes it crazy? Is there some weird flavor to it? Is it like a chocolate hummus, which I have seen that before? I would term that crazy. But crazy hummus, let us know what makes your hummus so crazy. But I like your handle either way. He says, long time, first time. Oh, well. Welcome to the Writing In Club, Mr. Crazy Hummus. He said, or perhaps Mrs. He says, this question is for Mark and Dan on OBC. Well, you passed the first test. You sent it to the right place. I know the first rule of selling puts is to be comfortable buying the stock at that strike. But do you ever find yourself selling a put where you don't really want to buy the stock? You're just in it for the premium. It's okay. You can tell us. We're all friends here. In seriousness, thanks for this show. You guys have gotten me through some hard times. Oh, I remember hanging out at home alone during COVID, just slinging options and mainlining OBC. I'm ride or die, Options Insider, radio network for life. Wow. If you're ever in, looks like Oklahoma, I'll buy you guys a beer. Well, thank you for that, Crazy Hummus. We're happy to serve and get you through some. Yeah, those were some fun times over there in the COVID days out there. We were happy to put out a lot of content because a lot of people were in your same position, Mr. Crazy Hummus. They were stuck at home, and options were kind of the only thing keeping them sane. So we were happy to help during that trying time. I'm glad it worked out for you. Dan, he asks, sell inputs. We always say the first the rule of thumb with selling a put, right? The first bit of risk management you're supposed to do is saying, do I really want to buy the stock at that strike? But sometimes folks just want the juice. Sometimes folks just want the premium. What springs to mind to me actually is those puts I was just joking about, the Palantir puts. Once I got run over, Dan, I wasn't too giddy about buying the stock. Sub 8 handle. Of course, I should have held on to it. It wasn't a bad do, as the kids say. But I was so annoyed by getting run over. Whatever I sold those puts for, not much, 25 cents probably. And then have them just blow away my strike. It was kind of annoying. So maybe that's a scenario that comes to mind where I wasn't really enthusiastic about keeping the stock, even though obviously in the benefit of hindsight, it is now more than 10x to the good, that level. I know myself though, Dan. I know the hardcore trader that I am. I never would have ridden it the whole way up. I would have legged out and moved on to another trade. Once PEs get north of 400 or 500, I tend to get a little squirrely anyway. So yeah, that one comes to mind. I'll have to think of some more. Dan, you ever have that moment where you're like, I don't know if I really want the stock here, but that juice is too good, I got to squeeze it?
Yeah. I mean, more often than not, I do want the stock. I mean, I talk about that in my, my classes and in the new book I'm doing as skate or trade objective. Is my objective, before you even make the trade, what is my objective? Do I want to try and skate on these puts and just take the juice and not get assigned not get assigned? Or do I want to get assigned and trade into the stock? And I will do both. More often than not, want to buy the stock, but sometimes I'll do that. And a lot of times if I do that, I'll do a put credit spread instead of taking all that downside risk. But, there's a time and a place for everything. I will do I guess you would call that a naked put. I'll do that occasionally. I'm not afraid.
Yeah, that's definitely a better way to go when you're not really that sure about the name or you don't really want it. A little bit of a put spread just in case the worst comes to pass. Another one comes to mind, Dan, and this is a naked example. We knew going into that was going to be the case. It was one of our early pro options oddity shows with your buddy, the Rock Lobster. And I forgot if it was him or myself. We discovered this name, this Chinese online educational name. Ticker symbol was EDU. And the stock was, I want to say around maybe $3. And we saw I think it was the 2 puts trading for some astronomical price. And with like a week or so to go, not even. And there was no earnings or anything. It was like 50, 60, 70 cents, something ridiculous. And so the Rock Lobster and I, both degenerate traders that we are, was like, we should just sell these for fun. It'd be fun for the show. We'd have some good content. We have no idea what this name is or what it does, but these puts seem dramatically overpriced. It was like 15, 20% of the value of the stock for, a couple of days holding period. And go figure what happened, Dan. Of course, we got put on the stock. And it turned out that premium was not overvalued. It was actually undervalued. But we turned it into a fun learning moment, a teaching moment on the show, because we ended up legging in and out of calls against it and selling more puts and doing a whole bunch of fun. It was a fun saga. It ended up going out for about a year or so on the show. We ended up making a fair amount of money on the trade. It ended up being a pretty good do, as the kids say. But it was another good example of just don't willy-nilly dive into puts, let alone in a random Chinese name that you never heard of, just because it was so juicy. Now, maybe if we weren't recording a show at the time, you probably would have been a little bit more judicious. But sometimes, Dan, you have to err on the side of good content as well. And that certainly made for a year's worth of good content. So I can't get angry at it. But it was a very stark reminder. Sometimes $2 puts are 50+ cent bid for a reason. The market maker's not always idiots, listener. Sometimes they know what they're pricing in over there. So yeah, that does happen. I think, who is that? Again, Crazy Hummus, great handle. If you are going to do that, I know you want the juice, so it's kind of hard to part with some of it, but probably a little bit smarter to do the put spread then, just in case something crazy. You're going to give up some of that precious juice. I know, but you'll also live to fight another day. Or you'll be like the Rock Lobster and I and slowly dig your way out of the hole that you created for yourself and have a fun learning moment along the way. All right, let's go out to... I don't know, Dan. We have a battle now for best handle. I like Crazy Hummus, but our next guy is Laser Pants with a Z. So if you had to pick one, Dan, which way you going? Crazy Hummus or Laser Pants? Who gets your vote?
I'm a Laser Pants. I'm in camp Laser Pants.
Laser Pants is pretty good. I'm not going to lie. But if I had seen that one first, I might have gone that way. So we have an embarrassment of riches on the handle front. You folks are bringing it. Good job on the handles. Let's see if the question can live up to the handle. He says, loving the pod. Is there a strategy or approach to options trading that you anticipate using more frequently in 2025? More frequently than I suppose by the implication of your question than I did, let's say, last year. That's an interesting question. I might have to mull over that a little bit, Laserpan. It's off the top of my head, nothing screams out to me. Like last year, we had some obvious setups that you could plan for and prepare for ahead of time, right? The big one that comes to mind, of course, was the election. Everyone knew ahead of time that it was going to be on the docket, so you could do, time spreads, you could trade VIX futures, you could trade VIX options, you could do a lot of things ahead of time to set up and trade around that event. Of course, going into the election itself, I talked many times on the network about it seemed like the good old-fashioned trade of just buying some downside, would probably work out, buying some downside in the vol space at least. And that worked out like clockwork as well. So there were some obvious setups last year. This year, we don't really have as many of those big, obvious setups. There's some traditional market movers. You have your Fed days, you have your, CPIs, a few other things out there. But I don't know. Nothing's leaping to mind, Dan, where I say 2025 is going to be the year of X, the year of time spreads or straddles, whatever the case may be. I don't know, Dan, if I ask you, 2025 is going to be the year of what? What is it the year of for you?
I don't know. I mean, you know me, like straddles have been more and more of a thing. And there's still some really good opportunities for them. And a lot of the smart people that I talk to are talking about, a potential sell-off. And I don't know, straddles might be not like the thing, like hey, that's all I'm going to trade is straddles, but maybe more than last year, which was more than the year before, which was more than the year before.
Because last year you were already pretty heavy on the straddles, sir. So yeah, you're going all in. Might have to start changing the name from Market Taker to ridethatstraddle.com. What do you think?
Yeah, I'm going into GoDaddy right now. I'm going to buy that.
There you go. That's probably available. Go for it. Let me know if you get it by the end of the show. Here's another one. This is a different handle. Elysius. Hopefully I'm pronouncing that right. Elysius with a Z. They say, I'm trying to cut my teeth in calendar spreads. All right, well, he came to the right place. So far, it's slow going. Mostly one lots of straight at-the-money 1-month calendars using calls because I find those easier. Yeah, I think starting off with call time spreads and count is probably easier for most people to wrap their heads around. You can obviously go the put route, but I think most people, they get the call, so I understand why you're doing that. Because my basic premise is that if I think the stock won't move for a month, I'll buy the call calendar for a small debit. I try to keep the outlay small, usually under 50 cents, preferably around 25 cents. Then if nothing happens, I close out the front month call, let the second month ride. If the stock drops, then I let the front month expire worthless and either let the second leg ride or roll it down to a lower strike. I'm a little confused what to do if the stock rallies early, though. Should I just close the whole thing out and take my hit? I could close the front month leg for a loss and let the second leg ride to try to make up the loss. But that sounds like a fair amount of risk to me. Any thoughts on what to do with calendars if the underlying moves too soon? So Dan, we got Elysius here. He's starting to learn calendars. He's doing little one lots on the call side, trying to keep it pretty manageable. He mostly likes the scenario where the front month goes out worthless, then he has a cheaper second month call, obviously in his back pocket. But he's a little confused. What should he do if the underlying moves a little bit earlier, Dan? What do you like to do in those scenarios?
Well, I mean, we could do a whole month worth of shows on covered or not covered calls on time spreads. I mean, I would address the criteria for putting on the time spreads first. For me, when I manage them, I almost never go from an at the money time spread, which is a sideways thesis, to just being long a call, which now all of a sudden is a bullish thesis. Like your forecast would have to change in order to justify that. because otherwise, why would you go from neutral to bullish? So for me, if I put on an at the money calendar and the stock rises like close to the projected break even, I'll either just close the darn thing or roll it into a double calendar by doing another call calendar at a higher strike. But there's a lot to unpack with all of this. I mean, we could do a whole show just on this one question. I get so many things to talk about.
Dan has already put it in motion, listeners. A month of time spreads. We did just do a whole bunch of time spread episodes recently. I'll have to go back and dig up those numbers for you. Speaking of digging up episodes, listeners, we'll get out of here for our snow day. The wind is howling. Dan is starting to freeze, listeners. The fire is starting to get low, but we got time for one more here. A few more embers on the fire for this one. Let's go to this one. I'm gonna say Emus99, EMUS99 wants to know, do you guys ever really trade iron condors? Maybe time for an episode on them would be pretty cool. I'm just saying. Well, I'm just saying, Mr. or Mrs. Emus99. We have talked about iron condors, even though it has been a little while. Our most recent episode actually was a two-parter on iron condors. It's back from September. It's episode 203 and 204, back-to-back from September 14th and 21st of 2022. Dan, it was during your mastermind. It was a mastermind Iron Condor Renaissance, part 1 and part 2. We also talked all the way back on episode 90 from June 10th of 2020. Man, the dark days of COVID there. We talked Let's Talk Iron Condors there as well. So there's 3 examples of Iron Condor shows that we've done. Some from a few years ago, some from a little bit longer in the primordial ooze now. Dan, do you recall that mastermind Iron Condor Renaissance two-parter? Because it came out of your mastermind. And then B, is it time for us to revisit these like Emu suggests?
Honestly, I don't recall it, to tell you the truth. But yeah, I mean, I do trade iron condors. So yeah, maybe we should revisit it. Man, we're booking our schedule out here until halfway through the year, man.
There we go. We got a month of time spreads. We got an Iron Condor episode. I love how your mastermind just completely slips your mind. So I love it. That's great. But yes, listeners, if you go into our website, is a great place to search the deep archives of the show. I would say our app, but our app, we're kind of doing some updates. So by the time you're listening to this, it may or may not be available in the app. In fact, maybe after the show, maybe I'll go check on the status of that. But our website's a great place to go in case you're at an outlet. I mean, it's available all over the place online, but some online outlets limit you to a certain number of episodes that you can access very readily. Might be the most recent 50, in which case you should be good. You won't get back to episode 90, though, obviously. So if you want to see all of them, our website's probably the best place to go. Just go to that webpage and then just search for whatever you want, Iron Condors. We're working on jazzing all that up to make it even easier for you folks to find. Obviously, we have decade plus of content for you folks to search, so making that more accessible for you guys is always a goal here as well. All right, Mr. Dan, I think we survived the snow day. The wind is still howling. I got to go put a few more logs on the fire. While I'm doing that, sir, where should folks go if they want more MTM goodness in their life?
Sure. Hey, check out our new Substack, which is a little different from what I do at Market Taker, but that Substack is Wealth Building with Options.substack.com. WBWO, just for a mnemonic device. Wealth Building with Options.substack.com.
I just learned about, I just memorized MTM. You're going to make me learn another one now, WBWO. You're killing me with these acronyms here, listeners. Check it out, though, on the Substack. If you've mastered everything at MTM and you want even more goodness in your life, listeners, there you go. Speaking of getting more options goodness, check out our friends over there at tastytrade. They got a lot of options goodness for you over there, including a great platform for trading them their options. To get some of those folks back on the show. They're always fun to chat about fun strategies like jade lizards and all the other crazy stuff they have going on over there. But in the meantime, check them out, tastytrade.com. Tell them we sent you. They'll be very fun to hear it. And if you want to hear more in your lives, if you're hanging out in the pro, just stay put. We'll be back in a little bit to talk all things futures. Our good buddy Kevin Green from the Schwab Network going to dive into all things. What's lighting up the tape in the world of futures? Well, if you're hanging out in the pro, you'll be coming at you post haste in your ear holes. You want to get access to that, listeners, theoptionsinsider.com/pro. Get you access to the early content, the live streams, all that fun. And then, of course, if you're listening on demand, just hit next, and the futures rundown should be waiting for you there. With bells on, back again tomorrow for our usual doubleheader, This Week in Futures Options, as well as the option block with our buddy the Flowmaster. Friday, of course, vol views, and then back one final time for our pro members for a whole bunch of weird, wild, unusual activity and options oddities. Then we're back again next week, all the way through to next Education Wednesday, another episode of Options Bootcamp. Stay safe out there, everybody.
Old trading walks into a bar. New trading raises it. Unlike some guys, tastytrade puts traders first. Maybe you're the type to hunker down on your desktop for hours. Maybe you breeze by on your browser. Or maybe you just need that top-rated app right by your side. However you do it, tastytrade's got the most advanced tools you need to tackle stocks, options, futures, and more, all in one place. Chart your heart out with over 300 indicators. See opportunity differently with interactive curve analysis. Use backtesting to learn from the past and plan for the future. The platform is only the beginning of better trading. You'll also find low pricing, lots of education, and backup from a support team that really gets how traders trade. It's no wonder Investopedia named tastytrade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/ride with us and see for yourself. tastytrade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.